especially in the inflationary environment. And then we're going to do a quick flip. We're going to go from inflation to deflation because basically we're going to outstrip everybody's ability to buy anything. And that's just going to shut everything down. And that's 2023.
And good afternoon, everyone. Today, Bob Kudla from TradeLikeAGenius.com. And you can talk about the industrial side of things with, fertilizers and farm inputs on farms that have 10,000 acres that they need to get herbicides and that sort of thing to get planted, plus their seed. But then what about you and I down here on the ground that are going to the supermarket? We're looking at least double-digit inflation coming through. Aldi's raising food prices 50%, not only in Germany, but here in the United States. We got Walmart repricing up to 6,000 food items per week now as we move through these times. Rice is going to be down 3% here in the United States for production. And everywhere you look, it's either something on the industrial side or something on the consumer side. And we want to divide this out because the information is really important on where we're moving. And can you see through the cycle here? And can you see through the next few months of how all this is going to dovetail right into our laps here, literally in everybody's life? We're all going to be affected by this. So Bob, I appreciate you joining me because it was more like where we were a few months ago talking and then where we are now. It's almost everything that we were talking about has manifested so quickly. And that's the thing that, is like, whoa, it's far faster than the 6 month or 1 year period. Now it's in months, when we talked before, and things are ahead of schedule on the timelines, it looks like.
Yeah, look, these things happen, they don't matter, and then they really matter. And so, we, and you and I, when I say we've been talking about this for a long time. So a year ago, we started this process with Mosaic. Mosaic was my play for the fertilizer. I mean, IPI is good. There's other companies in that space, but I like Mosaic. It's a Canadian company, close by, can understand it. And we made a triple on that in position. So what I think is happening with fertilizer, and we'll do this in two segments. So this first segment, let's talk fertilizer and food, and farm food and eating food. And so in the second segment, I want to talk a little bit about the whole renewable energy space because they kind of tie. And this is where the opportunities are for us in the next 6 months. So I personally believe, looking at the charts here, that fertilizer prices have probably, at least from a stock standpoint, have probably topped. Okay. We don't have that much of a deficit in fertilizer. Okay. And when we get to prices this high, you start bringing in what's called the brine market. Okay, so there's two ways of getting fertilizer into your farm, right? You can dig it out of the ground, ancient seabeds, right? Or you can brine it. So what I mean by brining it is that you basically take seawater, you dry the salts, and then use chemical processes to extract the minerals that you want. You can get magnesium, potassium, phosphorus. Nitrogen you get other ways, and sulfur. Those are the big ones. So you could draw all those out of seawater, and so you get to a point where it becomes so expensive to extract via mining that you're going to extract via brine, and you're going to start bringing on a whole lot of new players. You don't have to look any farther than like Israel, right? So Israel has mining operations in the Dead Sea, right? Because that's where you get the minerals from. But they're also huge in water desalination. And all you have to do is turn those brines from dumping it back into the ocean into evaporation ponds, and you can start extracting the chemicals. So I think at some point that plays over for me. So, we may get a squeeze here and there, but I think, going into the next fertilizer buying season, I think you're going to see supply coming from that marketplace. And the other thing too is Belarus and Russia and Kazakhstan, all those places need to get hard currency. And no matter what their big fight is now, they're gonna if Europe's not gonna buy, which I think Europe is on suicide watch. I don't really understand the way they're reacting to all these things. They're like betting on the come that their people won't die before they get these sanctions to bite against Russia. So one of the things they decided this morning yesterday was to not import Belarusian potash and not use the fertilizer. Well, that means they're going to be drawing from the rest of the world, which is going to raise prices for everybody else. But all Belarus has to do is sell to India or sell to Brazil. And I'm sure there's some entrepreneurs there that know how to arbitrage a freighter that gets tagged Indian owned over back into Europe with a little bit of a surcharge in there. I'm sure the Turks will be all over that, right? That's their natural way, right? They're traders, and they're going to intercept all those sanctioned goods, because I can't tell what Belarusian potash looks like versus Canadian. I don't know if you can, Dave. And so you're going to see, I think fertilizer is going to top out.
Bob, can I throw something at you there? Because off Fertilizer Daily today, their headline was Belarus limiting the export of potassium fertilizer. But you're having something saying different, that the EU said they're going to sanction it. So which one is it really? Because Belarus says, no, we're going to halt all potassium fertilizer exports. But then from the other side, so, it's all this narrative thing. Which one is truly correct? I mean, as we're walking through, we're waging and kind of just going through the muck of narrative here and blazing headlines.
Yeah, it's Europe. So I doubt Belarus will not produce and export, because last thing Russia needs is for India to say, hey, I'm going to flip over to the West here and start pounding you with sanctions too, because India kept their mouth shut because they need Belarusian fertilizer. So if Belarus doesn't sell them fertilizer, I think Belarus is going to export. It was the European Union that said it yesterday, that they're not going to import Belarus's any of the products. So even then they're not going to import Belarus's seafood. I'm like, I don't think they're on an ocean. So I don't know where that one came from, but that was on the list too. So yeah, so I think fertilizer's topped out. But now we're going to go through the snake here. So you're going to see, and we're seeing it now. We're seeing a dip in meat prices because a lot of the animals are probably going to go to slaughter here, and then you're going to see them rip up higher towards the end of summer. And so you want to own, what you want to do is you want to own companies like Hormel and Dean Foods, who buy the product, hold it, and sell it at a higher price. So they're going to get a natural arbitrage. And then the grocery stores are doing the same thing. That's all grocery stores are inventory control machines, right? So they're going to get all these products in, they're going to mark them up. And then as the inventory sits there, the prices keep going up, and the grocery stores are going to make more money. So those are the two areas that I would be looking at to make money on the food side. But the fertilizer play is over. When I say over, probably by next time we talk, I think we're going to see those things have topped out.
Just to put some context on the beef prices being crushed. Well, it seems that the three major railroads in the United States are calling force majeure on their grain deliveries so they can get higher freight rate from consumer goods like Walmart, for example. So if you can't get the grain to the feedlots or to the whatever animal husbandry, fill in the blank that it would be, from turkey to chicken to hog to dairy cattle to feeder cattle, if you don't get that feed there, they all need to go to market because they're going to starve. And this is why there's a tidal wave of meats coming in, because on the grain side, they can't get the feed to those facilities. And it's going to be a tidal wave of overselling for a little while. But then what happens after that? You're going to look at smoking high prices after that. Once that supply makes its way through, like you talked to Snake there, once that runs out, it takes quite a while to bring back a full herd to maximum production of, if it's milk, for example, but those meat prices are going to depress for a little while, but they're going to spike up. So when you talk about supermarkets, what type of price rises are we looking at? You said double digit here when we were talking before our interview here. And then on what goods do you think that would be specifically?
Yeah, well, it's not going to be the soft goods. So it's going to be actually the perishables. So yeah, because California has water restrictions coming, and we may dodge the bullet on water this year, but a lot of farmers have already sold their water rights out, and so there's going to be less crop being grown here in California. So anything on the perishable side is going to go up in price significantly this year, and then you have the obviously, I think soybeans are going to be in ample supply because they can fix nitrogen, but I think corn's in big trouble, and that's going to equate into higher prices for pig. going out into the end of the year, and also for beef, because they're primarily grain fed. And so it's going to be problematic there. And chickens too. Chickens are primarily grain fed as well. So I think you're going to see meat prices go up again significantly. And then packaged goods they're already jamming the packaged goods that are made with food. So yeah, so that's what I see. But it really is irrelevant to me. I look at it as, how do I outpace the inflation? I think inflation is going to be in food's going to run 20% plus, this year. I don't sit down and calculate it in detail, but it's sure trending that way now, and I don't see any reason why it's going to go down in 2022. And no matter what the Fed does, they're trying to raise interest rates, but they're not going to be able to stop the four horsemen of the economic apocalypse, one of them being food prices, because it's not dependent on Federal Reserve interest rate policy. You need to eat, you're going to eat. If there's a supply problem, prices are going to go up and stay up. And, we basically have 1970s all over again, except now we have a food crisis worldwide to go with it, because it's not just a United States problem, it's a worldwide problem. And, we want to get in today, but, the frost and the cold weather that we're having in the Northern Hemisphere is going to be problematic for actually getting crops even in the ground. So we could be hitting with, kind of triple whammy here, right? Declining currencies, supply crunch, fertilizer crunch, and then they may not even be able to get the crops in the ground. And California get water on top of it all. So, yay us.
Yeah, I would agree. 20% might even be mildly conservative, 50% or more, because, looking out into May and June here, when the crops actually try to get in and they finally get some accounting as to what was planted, there's going to be that realization that A, maybe the acreage wasn't planted, but B, they don't have the herbicides and the fertilizers at the rate they did in prior years. And then I'm looking at one of those same headlines, similar here off the Watchers. Record-breaking cold hits Europe, causing widespread damage to agriculture. But we have the same thing trending and coming in behind in the U.S. here. In these days, as we're speaking, it's going to be below zero again, or below freezing, 0 Celsius. But again, how are you going to protect plants and emerging plants out there? It looks like nature's going to hit us with one set of variables, decreasing yield, but then, this whole fertilizer and supply chain bottlenecks are going to hit us another way there. So, really how advanced is the brine technology? And it is really going to come down to the fertilizers. And then when we come into the middle of summer and they do the crop tours and they start to go out and, look across fields, they're going to be like, we don't see anything growing out there. Everything's stunted. There's barely any. Then what? Then this is where it's talking about the industry versus mainstream, because industry is going to pivot first and the information is going to affect industry first. Because once they hit those crop tours in the middle of the summer and they see that, wow, the yields are incredibly diminished. And then they're looking down 3% decline on rice. They're not going to grow rice because it's a heavy feeder. Well, the same thing with corn. It eats a lot of nitrogen, it eats a lot of fertilizer. They're going to move over to beans. Now, hopefully they would pivot to an enormous of different types of beans instead of just soybean. But, that's fantasy world, I guess. So where does that take us with, okay, food inflation is one thing, but then what other types of inflation do you see across the landscape? Food, yeah, everybody's got to eat, but then what's happening with the fuel side of things, the energy side of things? I mean, we're going to stay on coal? No, they're stopping coal deliveries in the EU. I mean, it's just domino of the next thing and the next thing and the next thing, all through everywhere, every industry that you and I would have a consumable at the consumer end of things. So what are you seeing on the energy side?
Well, I mean, energy is the same way. We had the big spike in oil, because of the narrative around the war. There was never a supply disruption with energy. It's simply a monetary function. It's a place where people hide when they think the stock market is going to suffer because of inflation. So, it's kind of a self-fulfilling prophecy, but, we may have hit our high. My target was 120 when, we were talking last year when it was at 65. It was a measured move. And now, as of today, it's down to $96. So I think energy is going to abate a little bit. We'll probably get another push higher into the summer. And then we're just going to have to wait and see if more production is coming online, or if there's going to be a basically reduction in production, just from natural aging of the field. So my view is that we'll probably get another one more push up higher, and then I think deflation takes hold in the country and go into recession in 2023, and we'll probably see much lower oil prices. And what goes along with that is natural gas prices. What go along with that is nitrogen.
For me, I'm interested in making some money when these markets are moving, because these types of moves are unseen before. So gargantuan, moves up and down so quickly. It's like exiting out on oil at 120. I mean, can you walk me through that? We did talk. So, getting in at 70, 80, and then trying to come out of your position. I'm not really clean on that. Is
Yeah,
that more of a commodities play? Are you back onto the traditional stock market? Were companies involved with that, or how does that work?
yeah. So, well, there's two ways to play it really well. Most people don't play the futures, so I won't really get into that. That's pretty difficult for people, especially on the retail side, to try to manage a macro oil position on futures. But as prices were pushing higher, we were buying stocks called UCO, which is a triple of the oil market, and that's a stock you can buy. And then we were leveraging that with options. And then when it started pushing up into $125, $127, we bought what's called UCO puts, because it's a triple leveraged ETF. And there's a thing called slippage, which allows you to make a lot of money when that overbought condition relents. And it relented. And so we made money that way with it. We're still long oil drillers and E&P companies because oil's not priced at the current prices. So for those companies, their analysts are suggesting their profits are based on lower than $96 oil prices. So they're going to be in really good shape for the next 6 to 9 months. In fact, we have oil names in our family for decades. So, some of the stuff we'll just never sell because that pays dividends and things of that nature. But look, unless oil gets back underneath $65 a barrel, your oil drillers are all going to make money in the market. And that's how we'll play them, by just buying and selling them based on our algorithm. And if people want to trade with us, they can just go ahead and check us out at tradelikeagenius.com. We built algorithms to buy and sell these markets, and they're very easy for you to use. We give you access to them. We have chat rooms where you can ask questions about it. We have training videos to show you how to use it. And then, we also give trades out. So we're active in the market. In fact, we bought a company called Matador Energy today. So we think the move down in oil is overdone, because the Biden administration is trying to do releases from the SPR, which is going to end in a couple of weeks, and oil will go right back up again. But just check us out. Our bundles are 65% off, Dave, and you can use promo code SPRING if you want to buy anything that's not bundled in the store, and that gives you 40% off anything not bundled. Anything bundled is already pre-discounted. And you'll do really well. As you and I know, Dave, you and I have been talking about this for 7 years. So we have a good handle on all these markets and the stocks that participate in these industries, and will help you make money, especially in the inflationary environment. And then we're going to do a quick flip. We're going to go from inflation to deflation, because basically we're going to outstrip everybody's ability to buy anything. And that's just going to shut everything down. And that's 2023. So thanks for letting me plug that.
Because you were talking about USO, is there anything? I think wheat is also another one that is on that ETF on the wheat side. I don't know if it stopped trading because prices jumped up so quickly, but I am still calling $20 wheat by the end of the year. People thought I was a madman when it was $6 calling 20 at the end of the year, and here it was already up to 14. So what are you seeing on the more the grains ETF side of things?
Yeah, there's only a couple of them. There's WEAT, there's SOYB. A lot of them went on to the over-the-counter, which are not really fun to trade. No. You can buy the ETF DBA if you want, but I'm less interested in those, even though those are pretty massive moves. Those commodities don't move enough for you to move the needle in trading those things. So those are things you hold if you just want to hold a macro. You can make a lot more money just trading some of these other names around, like in the fertilizer group and in the energy names. So you want volatility, And that's how you make money trading. It's okay that you have a macro call, but how many years does it go from 6 to 20? Very few. So, you can make 150, 200% trading stuff over weeks if you're trading some of these other higher flyers than you will just buying those commodities outright. You can't go futures with those. It's too much leverage for most people.
No, that was it. Because yeah, you're right. You asked that question. How often does it happen? Once every 70 years or so, perhaps once every 50 years. It's truly once in a lifetime play that you're seeing right now on a lot of things. I mean, yeah. At what point do people realize, and then they look at their pocketbook and say, whoa, everything is just, the inflation has outstripped. I mean, how are people going to scale back their lifestyles unless they're making more money to be able to, stay in step with the inflation?
Exactly right. So we call it the two people in the bear market story, right? You and I are walking in the woods and a bear shows up and I sit down and put my sneakers on. And you ask me, why am I putting the sneakers on? Because I can't outrun the bear. I said, I don't have to. I just have to outrun you. And the point being is that you just have to outrun the inflation. So if you think your food bill is going to go from 200 a month to 300 a month, well, that means you got to figure out how to make $100 more a month. And you can do that trading. And so we can show you how to do that. In fact, you can do that trading in the industry that's being the offender. So, there's a lot of ways in which you can go ahead and buy companies in that industry, take advantage of the move higher, and then you can outrun the inflation and you can then pay for the things that you need to eat. So you're not going to be a victim. You can be a victor in these situations.
Yeah, again, I'll say that's a real conservative call, 200 to 300, because wow, I'm looking at something like 200 to 800 or 200 to
Yeah.
600.
Yeah, I'm not quite there yet. I think
I know I'm trying to preach to you, Bob.
yeah, I just think that might be a 22 to 23 issue. I'm less concerned about this year, Dave, than I am next year. So if I'm wrong on
are you?
fertilizer,
Okay. I'm more of a close in, looking at things happening immediately within months, plural, versus out a whole year from now.
yeah. So my worry on the farm is that most of the farmers have fertilizer already, and so a lot of them prepared fertilizer in the fall. They don't pour it on, 'cause you don't want to burn the crops out if you try to dump too much fertilizer in as you're planting. So a lot of these guys put fertilizer on the ground in the fall. So it's really next fall and spring that I'm worried about. If I'm wrong on fertilizer prices and they stay this elevated, you're going to see a lot of farmers decide to idle their fields, or they're going to grow crops that are less relevant to our life. And it's going to be, I think 2022, 2023 is where we're going to see the come to Jesus moves if fertilizer prices and energy prices don't relent. Because farmers simply are going to have to, they have to make a big gamble. Do they pay up for fertilizer prices? And what happens if the food prices come down? Well, they go broke. What happens if they don't put enough on the ground? They don't have enough to pay the bills on their farm. They go broke. So they can just simply call the government up and say, I'm going to idle my field this year and get a check. So those are the things that I'm looking at. Is going to be, unless they figure out how to stabilize these fertilizer prices, it's going to be 2023 is going to be the year to worry about. 2022, I think we're going to get good old fashioned monetary inflation. The whole Russia-Ukraine thing is a pig in a poke. Russia and Ukraine can sell anything they want, anytime they want to the non-aligned nations. And the people it's going to hurt is primarily Europe. If you're listening from Europe, I really feel bad for you. Your policymakers are trying to kill you. Okay, United States, I think it's really going to be more issues, but we just have two geographically diverse, growing areas for us to get hurt any one area. And, and I think, we can get Canadian minerals, right? They just come right down. Canada is not going to ban exports to the US. I think they do it under penalty of not being Canada. So I don't think that's going to be an issue.
Well, since you brought up Russia here, gold, silver, Russia's trying to move over to a gold-backed ruble and then a gold-backed commodity settlement instrument. And you can pay physical gold at a premium discount for the oil. If you deliver a plane full of gold, you can actually get a discount on that. So what are you looking at for the metals here? I know silver, is more industrial and thing, but any thoughts on gold prices moving because of Russia's new stance, again, trying to sell to non-aligned nations to take in physical metals, Bitcoin, that kind of precious metals, and the cryptocurrency for settlement. Anything on a horizon there that you're seeing?
I think once people realize that the Federal Reserve, even if they're raising rates, aren't going to be able to outrun the inflation, is that you'll start seeing gold and silver, surmount these resistance areas that it's in. But in the meantime, I have some silver miners, I have some gold miners. In fact, I got the big ones. I own Barrick, I own AEM, I own Wheat and Precious Metals. They're all doing fine. They're actually bidding up nicely. So I think that's going to be forthcoming. I own some of the smaller cap ones as well, but the big money is going to be made in the industrial metals around the renewable space, Dave. So, so you're looking at lithium. We have LAC. I think LAC is going to be a double between now and July. We've been trading in and out of that. It's trading at $33 now. It'll be trading in $56, $58 in the next 4 months. There's a lithium, shortage, and the Biden administration wants to spend trillions of dollars on Build Back Better Green New Deal, and they're going to need lithium to do it. It goes right along with that is cobalt. So, a company that you want to get your hands on, another U.S. producer, is called PLM, Polymet Metals. They're out of Minnesota. In fact, when they dig into the ground, they dig out their renewable car. So one scoop has nickel, cobalt, iron, and gold in it. So the Mesabi range is very, very lucrative, and so they just restarted their mines. We've been trading in and out of that one. Is doing really well, but long term it's going to be a great trade. And there's a lot of times there's some overseas, over the counter stocks in Canada. I don't have them in front of me here, but we own a few of those. One of them being Cant, Alaska, and so there's some copper, cobalt, uranium plays over the counter in Canada that are very interesting to us. And then of course, my bread and butter is the uranium trade, and it's not nearly over yet. So we're looking for doubles in all the uranium names that we're in from here, and they've already tripled already. So between last year with fertilizer and uranium, we had an awesome year. This year we see nothing changing in that front, and throw on cobalt on top of that and nickel on top of that. And then once they start producing this huge infrastructure bill, you're going to probably see iron ore and steel go too. But gold and silver will kind of tag along. And then, with that, I think natural gas will outperform oil because Europe needs natural gas. Coal's going to outperform oil because if they don't get enough natural gas, I don't care what they say, Germany's going to fire up their coal plants.
Yeah.
And they're going to need coal. And then everybody needs met coal. So that's kind of where I'm looking at everything. And I think all those things are irrelevant to the Fed. Yeah. Can they knock it down a day or two or a week or two? But already today, the market's been down 2 strong days, and uranium CCJ is doing fine. So I just think these guys are just going to turn right around and go higher again.
So you really think that the Green New Deal is got some traction to it in terms of rolling out now, where they're going to dedicate a certain amount of trillions into each step moving forward, from the windmills to the solar panels to the electric vehicles to electric vehicle charging stations, et cetera? You think it's really got traction and it's really going to move forward? Because it's kind of the debate now. It's too costly. They can't get the metals. So it's another thing about trying to get to produce a battery in an electric vehicle. But you're talking about some of the same things, where if you can get the materials going into that, then you got the golden egg right there. The goose laying the golden eggs for you. Yeah,
look, they can't walk it back. That's the only thing they have left, right? Is their Green New Deal, and so they're going to push hard on renewables. They're going to make it impossible for you to own a gas combustion car. So they're going to have to come up with these renewables, and so they're going to have to dig it out of the ground, and so that's why you want to own uranium, because they're going to need nuke plants to have electricity that's cheap enough. Remember, this is not just a U.S. thing. Worldwide, India can't keep importing oil. They don't make enough exports, so they're gonna go nuke. China the same way. They're gonna go nuke, and so they need uranium, and they're gonna pump your renewables. So you're going to need all those things. And the United States is going to spend $1 trillion on renewable energy this year, and they're going to need metals. So let's buy them. I really don't care what they're worried about. They have to buy them. They have no choice. It's prices and demand is insensitive to price, Dave. So buy them, hold them, trade in and out of them. You're going to do fine. And finally, Bitcoin's going to just deal with the liquidity of the market. So if the markets go down, Bitcoin's going to go down with it. We get closer to the next halving cycle here in the fall. It'll probably take on a life of its own again. But in the meantime, we're kind of in alt season. So some of the alts against BTC will outperform. And again, if you want to know how to trade those or what to trade, just come to tradelikeagenius.com. We also trade cryptos. We have a crypto expert. My partner is a miner. He understands it. Nobody knows crypto better than he does. And he'll get you in the right trades at the right time. And we're not YOLO people on this stuff. We're very deterministic, and our long term to make a lot of money trading in the cryptocurrency market. Tons of opportunities.
Yeah, and Bob, thanks for joining me. And if we're going to go away from gasoline-driven cars, I guess I have to get my still out, and I have to, distill some of my own grain alcohols into alcohol to put into my vehicle like they did in the 1930s. And it seems like we're doing a whole another cycle again. But yeah, great information today, Bob. Thanks for sharing and gave me some ideas, and hope everybody else out there can sort of see the landscape we're moving into. A lot of opportunity in the danger right now. And the Chinese have a saying for that. It's called Wei Ji. And the actual characters are opportunity and danger together. And you put them together and you get that word Wei Ji. And you can see that's kind of where we're sitting right now. Anyway, I'll put all the links in the description box below. Head right over to tradelikeagenius.com. And Bob, any last words before we get out of here today?
Yeah, you're in the right state to be making grain alcohol. So you have a lot of people who will hide it for you.
It's all about where you're at in the planet. Yes, it is. All right, Bob, thanks for the time. See you later.
Thanks for having me. Bye-bye.